Hey guys, welcome back to the revision series. So in the previous session, we are actually halfway through the revision of the chapter audit reporting. So if you remember what we have revised in our previous session, so we have actually covered four standards, four SA 700 series of the standards, which are actually talking about the preparation of audit report, what should be the contents of the audit report, what should be the format of the audit report. So four standards we have covered in the previous session. So those four standards are actually SA 700, SA 701, 705 and 706. So 700 talks about overall audit report, what should be contents and all. So that all discussion we have covered in 700 and 700. 701 is a standard which is talking about key audit matters. 705 is talking about different kinds of modified opinion, in which circumstances you will modify, when you will give qualified, when you will give adverse, when you will give disclaimer. And 706 is a standard which is talking about emphasis of matter and other matter paragraph. So all these four standards put together, they are going to discuss about the preparation of the audit report, contents of the audit report, format of the audit report, terminology we have to use. So everything we have covered in a detailed manner. Hope you would have enjoyed that video in the previous session. So now there are a few more contents which are left out from this chapter audit reporting, which are actually important from the examination perspective. So those are reporting responsibilities of the auditor under Companies Act 2013. We have seen what are the reporting requirements of the auditor under standards on auditing. So nothing but when we simply discussed that four series of the SA 700, we are actually talking about what are the reporting responsibilities of the auditor as per the standards on audit. But apart from the standards on audit, the Companies Act 2013 has also put some reporting requirements on the auditor. And those reporting requirements are actually given under four subsections of section 143, section 143 subsection 1, 143 subsection 3, 143 subsection 11, and 143 subsection 12. So these are the various sections of the Companies Act under which there are various reporting requirements of the auditor. Out of all that, the most important thing from the examination perspective is 143 subsection 11 reporting requirements. This only we call it as CARO. These reporting requirements only we call it as CARO 2020. So that is the most important thing from the examination perspective. So quickly we'll be covering that. So but before that, I will also try to cover 143 subsection 1. What are the reporting responsibilities of the auditor under 143 subsection 1? So under 143 subsection 1, the auditor is required to comment regarding 6 matters. Under 143 subsection 1, the auditor is required to comment regarding how many matters? Regarding 6 matters, auditor is required to comment. So what are that 6 matters, sir? Very simple. Number 1, the auditor has to verify whether loans and advances which are made by the company. Made by the company in the sense the loans and advances which your client company has given. If they are on the basis of security, whether they are properly secured or not. Nothing but your client has given some loans and advances, and in their balance sheet they have shown as secured loans and advances. Now you have to verify whether they are properly secured, whether they are adequately secured. For example, the client has given a loan of 1 crore rupees and they are calling it as secured. And I'm asking the client, sir, what is the value of the security you have taken? So they're telling me that, sir, we have taken one two-wheeler as a security, which is costing around 1 lakh rupees. You tell me, is this loan properly secured? No. So that is what you need to verify and give a comment. So first thing, we need to verify whether loans and advances which are given by my client company to others, if they are stated as they are properly if they are stated as secured, we need to verify whether they are properly secured or not. Properly secured in the sense whether they are adequately secured or not. And also the terms on which they have been made are prejudicial to the interest of the company or its members. Nothing but on whatever terms and conditions these loans and advances were given, are they prejudicial? Sir, what is the meaning of the term prejudicial? Prejudicial means harmful. So on whatever terms and conditions your client company has given the loan, are they prejudicial? Are they harmful to the interest of the company? Sir, when we can say terms are harmful to the interest of the company is giving loan without any interest rate, without any repayment period, or interest rate which is far below the market interest rate. So these are the few examples of the terms which are prejudicial. So I need to verify whether my client company has given loan and on what terms and conditions they have given the loan. Are they prejudicial? Are they favorable terms? Or are they unfavorable terms? So that I have to comment. So first point under 143 subsection 1 is regarding loans and advances given by the company. Now, second point which is required to be reported under 143 subsection 1, whether transactions of the company which are represented merely by book entries. Sir, what do you mean by transactions represented merely by book entries? Nothing but here you can say provisions. Here you can say depreciation. So these are just book entries. Actual substance of the transaction will not be there. So I need to verify these kind of transactions like provision, depreciation, and any other entry which is represented merely by book entry. Is it prejudicial to the interest of the company? Nothing but in simple terms, I need to verify provision, depreciation, and I need to check whether those provisions and depreciations, etc., are created at appropriate amounts or they are overstated or understated. So that I need to give an comment. So second point is regarding book entries. Next, third point, whether company not being an investment company or a banking company, whether so much of the assets of the company as consisting of shares, debentures have been sold at a price less than the purchase price. If I put it in simple terms, that is what the summary of this. So I need to verify, is my client company holding any assets in the form of shares, securities, or debentures? If yes, have they sold that securities? If yes, did they sell it above the purchase price or did they sell it below the purchase price? Simply, if I have to put it, I need to verify whether my client company has sold their assets which are in the form of shares, debentures, etc. at a loss. Have they sold it at a price less than purchase price? However, if you pay close attention here, they're telling the company not being an investment company or banking company, which means this reporting requirement will not become applicable for an investment company or a banking company. If your client is either an investment company or banking company, you need not comment on this point. Next, fourth matter which is required to be reported, whether loans and advances made by the company are shown as deposits. Did your client company give loans and advances? Here also they are talking about assets only given. Here also they're talking about assets only. Has your client company given any loans and advances? If yes, have they really shown it as loans and advances or they're showing it as deposits? In case if I came to know my client has given loan to others, but instead of showing it as loan, they have shown it as a deposit, I need to report it here. So fourth point is also regarding loans and advances. Fifth point, whether personal expenses have been charged to revenue account. Sometimes the management of some companies could be very fraudulent, very mischievous. So what they will do is the board of directors or some top level management of the company, they incur the personal expenditure for their personal purposes, but they will show it as a business expenditure. So that I need to verify. So I need to comment whether whether in my client company's books of accounts, whether any personal expenses of management, employees, whatever it is, have been shown as business expenditure. That I need to comment. Next, last point, which is required to be reported under 143 subsection 1. If it is stated in the books of accounts that the company has any shares allocated for cash. Did the company state anywhere in their books of accounts that they have issued the shares for cash? If yes, have they really received the cash? Whether cash has been really received. In case if the cash is not received, whether the position as stated in the accounts and the balance sheet is correct, regular, and not misleading. So in case if your client is stating, yes, we have issued the shares for cash, have they really received the cash? In case if they haven't received the cash, whatever position that has been stated in the books of accounts, whether it is correct or not, like calls in arrears, etc., these kind of adjustments they have to show. Clear? So these are the 6 matters which is required to be reported under 143 subsection 1. First point is regarding loans and advances. Second point is regarding book entries. Third point is regarding shares, sale of shares. Fourth point is also regarding loans and advances. Fifth one is regarding charging personal expenses to revenue account. And finally, the last one is relating to company issuing the shares for cash. But however, 143 subsection 1 says that you are required to report on any of these points only when you have a negative comment. Only when you have a negative comment, only when you have unfavorable answers, then only you are required to comment on any of these points. In case if you have verified all the 6 points, for everything you got a positive response, for everything you got a satisfactory responses, you need not report it. Only when you get a negative response, then only you are required to report those specified points. So these are the reporting requirements under 143 subsection 1. Okay, we are done with that. Now coming to the next section of the reporting requirements, we have 143 subsection 3. See, under 143 subsection 3, we have total 9 plus 6 of 14 matters are there. 9 plus 6, 15 matters are there which are required to be reported. Now, what are these 15 matters? See, this subsection is not that suitable for revision. Why? Because even if I try to revise all these 15 points, it will be just like recollecting. It will be just like reading the points whatever have been given in the material. But anyhow, I have already done detailed videos regarding reporting requirements under 143 subsection 3. Those links I will add it in the description. Those links where I will add in the description, I will add. You can go and watch them for your sake of understanding. So now I'm skipping it for now, 143 subsection 3. Why? Because even if I revise it also, there is no much concept in such. I will be just taking you through this. I will be reading like this, whether you have sought obtained all the information explanation necessary, proper books of accounts are maintained or not. So like this, I have to just read the content. That is not the objective behind this marathon series. As I've already told you, this marathon series is going to completely concentrate on conceptual clarity. So here there is no much clarity which I have to give. It is just reading out the points. So in the description, I will add detailed video. There will be some half an hour time of video in which I will explain in a detailed manner reporting requirements under 143 subsection 3. You can watch it later. In the description, you can find it. Okay, so this I am not doing it for now. Next, we have reporting requirements on the of the auditor under two more subsections, 143 subsection 11 and 143 subsection 12. 143 subsection 11 is very important, which is nothing but CARO. But before that 143 subsection 11, I will try to explain reporting requirements of the auditor under 143 subsection 12. 143 subsection 12 actually talks about fraud reporting. So if you are an auditor of a company, while conducting the audit of the company, in case if you come across any fraud, in case if you have a reason to believe that a fraud has taken place in the company, then there are some reporting requirements which you have to fulfill. There are some reporting requirements which you have to fulfill. Very, very important, guys. This question is having a high chance of getting tested. So let us try to understand what they're trying to say. So in case if you are a practicing chartered accountant and you are conducting audit of a company, if you come across, if you have reason to believe that a fraud might have taken place in your client's company, then you are required to fulfill some reporting requirements. Sir, what are that reporting requirements? The reporting requirements are divided into two categories on the basis of amount involved in the fraud. If the amount involved in the fraud is 1 crore or more, there are different reporting requirements. If the amount involved in the fraud is less than 1 crore, then there are different reporting requirements. So on the basis of amount involved in the fraud, reporting requirements are going to change. So if the amount involved is 1 crore or more, what will be the reporting requirements? So the reporting requirements are, here central government reporting will become applicable. If the amount involved in the fraud is 1 crore or more, what has to be done? Central government reporting has to be done. Here, there is no central government reporting. You need not report the central government. There are some different reporting requirements. So what are that reporting requirements if the amount involved is 1 crore or more? So basically, you have to report to central government, but there is one manner of reporting. So what is that manner of reporting? First, we have to communicate the matter to the audit committee. If there is an audit committee in the client company, report to audit committee. In case if the audit committee is not there, then to the board of directors. Within 2 days of knowledge of the fraud. Here, there is one minute point which you have to pay attention. Most of the students often confuse that. The moment you came to know about the fraud, it is up to the choice of the auditor to decide whether he can report to audit committee or board of directors. No, this is wrong perception. This section 140 subsection 12 clearly says if audit committee is there, then you report to audit committee only. In case if in the client company audit committee is not there, then report to the board of directors. It is not a choice given to the auditor to choose one from audit committee or board of directors. However, there is a pattern set in 143 subsection 12. If there is audit committee, first report to audit committee. If audit committee is not there, then report to the board of directors. Within how many days? Within 2 days of knowledge of the fraud. Today, if I came to know about the fraud, by tomorrow or day after tomorrow, I have to communicate the matter to the audit committee if it is there. If it is not there, to the board of directors. Then after communicating, give them 45 days of time. For what purpose? To give their replies. After you have communicated the matter with audit committee or board of directors, give them 45 days of time in order to respond back. Now, within this 45 days, two things can happen. Reply received, and the other case could be reply not received. In case if the reply is received, within 15 days of receiving reply, within how many days? Within 15 days of receiving the reply, you have to report the matter to the central government. If you have received reply within 45 days, you have to report the matter to the central government and in form number ADT4. Sir, how I will report to the central government? In form number ADT4. In the central government, to whom I will report? To the Secretary, Ministry of Corporate Affairs. As a central government, you will not report to the Prime Minister of the country. So you have to address your form ADT4 to the Secretary, Ministry of Corporate Affairs. And what and all you have to report to the central government? Original report which you sent to audit committee or board of directors. On that, what responses you have received from the board of directors or audit committee. On those responses, what are your remarks? What are your remarks? So within 15 days of receiving the reply, you have to report the matter to central government in form number ADT4 to the Secretary, Ministry of Corporate Affairs. What and all you have to report? The original report which you have sent to audit committee or board of directors, along with the responses whatever you have received. On that responses, if you have any remarks, all these three things you have to report to the central government. Sir, what is reply? What is reply is not received? I have given 45 days of time, but the client is not responding anything. Then what I should do? Then also 143 subsection 12 says, then also report to the central government. Then also report to the central government. All the things are going to remain same. ADT4, it is going to be addressed to Secretary, Ministry of Corporate Affairs. But here what you will send is, you will send original report which you have sent to audit committee or board of directors along with a comment that no reply has been received. along with a comment that no reply has been received. So whether you receive a reply or you don't receive a reply, you have to report it. But what you are going to report, that is going to change. Clear? So this is what regarding amount involved in the fraud is 1 crore or more. In case if the amount involved in the fraud is less than a crore, no need to report to central government. But here what you should do is you have to report to audit committee as usual if it is there. If it is not there, to the board of directors within how many days? Here also within 2 days. Sir, what and all I have to communicate? What and all I have to report to audit committee or board of directors? Nature of fraud along with description. Who are the parties involved in the fraud and what is the amount involved in the fraud? So these 3 things you have to report to audit committee. Nature of the fraud, briefly describing it, who are the parties involved, what is the amount involved. With that, auditor's responsibility will come to an end. The moment you report to audit committee or board of directors, your responsibility will come to an end. But after that, board of directors will have a responsibility. They will give something called board's report. In that board's report, they have to report these 3 things. They have to mention in their board's report the above 3 things: nature, parties involved, amount involved. Along with that, what remedial actions are taken. So auditor reported the fraud. As a board of directors, what rectification actions you have taken, those remedial actions are also required to be reported where? In the board's report. So here auditor's responsibility will end the moment he communicates to audit committee or board of directors. Giving a disclosure in the board's report is the board of directors' responsibility. Clear, everybody? So these are the responsibilities of the auditor given under 143 subsection 12 whenever he comes across any kind of fraud. Understood? Clear and comfortable, everybody? So now we will try to proceed further and understand the reporting requirements under 143 subsection 11. And as I have told, those reporting requirements only we call them as CARO 2020. So let us try to revise it. Important from the examination perspective. Yeah, where are you? Yes. Fine. So let us try to understand the reporting requirements in CARO 2020. Now, under this CARO, there are a total of 21 matters. Regarding 21 matters, we are required to report. How many we have total? So we have a total of 21 matters regarding which the auditor needs to verify and give a comment in his auditor's report. See, before we talk about what are those reporting requirements, what are those 21 matters which are required to be reported, first we will try to understand applicability. Sir, does auditor of each and every company is required to report on all these 21 points? The answer is no. So generally, they have given some exemptions. Under Companies Act, they have given some exemptions. If you are conducting audit of any company which is falling under that exemptions category, then your audit report need not contain these 21 matters. Sir, what are those companies which are actually exempted from reporting requirements of CARO? Let us see. So this order applies to every company, including a foreign company. That means these reporting requirements are applicable even for a foreign company as well. Whenever in the Companies Act we use a term foreign company, we are referring to a company incorporated outside India but having a place of business in India. Because if a foreign company doesn't have a place of business in India, and if we go to them and ask them to comply with our Indian laws and regulations, they will ask you to get lost. So when I say foreign company, I'm always referring to a company which is incorporated outside India but having a place of business in India. So this order applies to every company, including a foreign company also. But however, this shall not apply to the following classes of companies. That means, in case if your client company falls under any of this category, the client for whom or the client company for whom you are doing the audit, if it falls under any of these categories, then your audit report need not contain CARO reporting requirements. Sir, which companies it is exempted? Number 1, banking company. If you are conducting audit of a banking company, no need to report on CARO. Why? Because for banking company, there are already plenty of reporting requirements under Banking Regulation Act. So Companies Act told, we don't want to overload you with extra reporting requirements. So for a banking company, we don't require you to report on CARO. Similarly, insurance company. If you are conducting audit of an insurance company, then also no need to report on CARO. And a company licensed to operate under Section 8, non-profit oriented companies. For that companies also, we don't want you to report on CARO. One-person company, small company. If your client company is a one-person company, or if your client company is a small company, no need to report on CARO. And a private limited company. In case if your client company is a private limited company, but not every private limited company. If your client is such a private limited company which fulfills 4 conditions, not any 4, all 4, very, very important. So if your client should be a private limited company, and if it should satisfy all these 4 conditions, then the CARO will be exempted. Sir, what are that 4 conditions which are required to be fulfilled by a private limited company to be exempted from CARO? Let us see. A private limited company which should not be a subsidiary or holding of a public company. So your client company, which is a private limited company, it should not have a holding company, which is a public company. It should not have a subsidiary company, which is a public company. I'm not telling your client company should not have holding or subsidiary. Your client private limited company can have a holding company, can have a subsidiary company, but that holding and subsidiary company should not be a public company. So if that is the case, for example, your client is X private limited, but your client is having one holding company, which is Y limited, which is the public company, then CARO will become applicable for you. So neither the holding company nor the subsidiary company of your client company should be a public company. And see, and when they are using the term and, they are expecting you to comply with all the conditions. So first condition, I hope everybody is clear. Second condition, the total paid up capital and reserves and surpluses shall not exceed 1 crore as on the balance sheet date. As on the current year's balance sheet date, for example, if you are conducting audit of the financial year 23-24, as on the balance sheet date, as on 31st of March 2024, the total of paid up capital along with the reserves and surpluses shall not exceed 1 crore. That should be less than 1 crore or less or equal to 1 crore, but it should not go beyond 1 crore. And this limit you have to see as on the balance sheet date. As on 31st of March of the respective year, you have to see what is the cumulative balance of paid up capital and reserves and surpluses. If it is less than or equal to 1 crore, well and good. Then you have to start checking for remaining 2 conditions. Next condition, the total borrowings from banks and financial institutions shall not exceed 1 crore, the most important term here, at any point of time during the financial year. So what is the third condition they are telling? You have to calculate the borrowings. Not all borrowings, you have to calculate borrowings only from banks and financial institutions. So you have to calculate, you have to take borrowings only from banks and financial institutions. Every kind of borrowing, secured, unsecured, short term, long term, every kind of borrowing from banks and financial institutions shall not exceed. That means it should be less than or equal to 1 crore, not just as on the balance sheet date, at any point of time during the financial year. At any point of time, from 1st of April till 31st of March, at any point of time, if the borrowings from banks or financial institutions exceeds 1 crore, then CARO will become applicable. So if you pay close attention in the previous point, for paid up capital and reserves and surpluses, they are not concerned what is happening during the year. For paid up capital and reserves and surpluses, they are asking you to check this figure only as on balance sheet date. But when it comes to borrowings, they are asking you to check at any point of time during the financial year, the borrowings from banks and financial institutions should not have exceeded 1 crore rupees. Clear? And then finally, last one, total turnover calculated as per Schedule 3, including revenue from discontinuing operations, shall not exceed 10 crores during the entire financial year. So for the previous financial year, the cumulative value of revenue shall not exceed 10 crores. It should be less than or equal to 10 crore rupees. If all these 4, not anyone guys, if all the 4 conditions are satisfied, that too by a private limited company. So if a private limited company satisfies all these 4 conditions, then for that company is also CARO exempted. So what are that 4 conditions? Very important. Number 1, not being a subsidiary or holding of a public company. Number 2, paid up capital and reserves and surpluses shall not exceed 1 crore as on the balance sheet date. The borrowings from banks and financial institutions shall not exceed 1 crore at any point of time during the financial year. And finally, the turnover should not exceed 10 crore rupees. If all these 4 conditions are satisfied by your client company, you need not report on CARO. And one more thing here, see what things you have to consider, what things you should not consider in the calculation. Everything has been given here. You can go through it on your own. So majority of the points I have covered. And one more thing you need to consider here. See, if you take holding companies, the companies, holding company will be required to prepare 2 sets of financial statements. One is consolidated financial statements, other one is standalone financial statements. So as per the requirements of the Companies Act, if a company is a holding company, it needs to prepare 2 sets of financial statements, consolidated and standalone. Audit will happen for which financial statement? Audit will happen for consolidated financial statements also. Audit will happen for standalone financial statements also. There will be an audit report on consolidated financial statements. There will be an audit report on standalone financial statements also. But here in the CARO, what they have told us, in the audit report of standalone financial statements, all the 21 matters are required to be reported. All matters should be there in the CARO. However, in case of audit report of the consolidated financial statements, generally CARO is exempted. Only one clause number 21 is required to be reported in audit of consolidated financial statements. For the standalone financial statements, audit report will contain all the points, but clause number 21 only needs to be reported in the case of consolidated financial statements. The initial 20 clauses need not be reported. Only 21st clause, only one clause will come in the audit report of consolidated financial statements. In the standalone financial statements, all the clauses are going to come. Understood? So these are some special points which you need to consider in the calculation. So since now we have become clear with applicability, which company auditors are required to report on CARO, which company auditors are not required to report on CARO. Since we become clear with that, now we will try to understand what are that 21 matters which are required to be reported. What are those 21 matters which will be reported? So as you could see here, there will be a total of 21 matters are there which are required to be reported. We'll take up one by one and we'll try to close it. Okay, right. Everybody, are you all ready? Fine. So first matter which is required to be reported is property, plant and equipment. So they are talking about all kind of fixed assets, work in progress, intangible assets, everything they are collectively addressing. So regarding property, plant and equipment, there are some matters which are required to be reported by the auditor. What are they? So regarding property, plant and equipment, there are 5 matters which are required to be reported. How many? 5. See, overall, this is one reporting requirement only. Under this one point, there are 5 sub points which are required to be reported. Let us see what are they. Number 1. As an auditor, we need to check whether proper records regarding the PPE are maintained or not. They are not asking auditor to maintain the records. They are asking the auditor to verify whether the management of the company has maintained proper records regarding PPE, and from that records, they should show quantitative details. Nothing but in that records, we should be able to find the details of how many number of PPE are there, and also situation where they are located, where that PPE is located, whether it is located at head office, whether it is located at branch office, that details must be captured in the records. So whether your client's management is maintaining those kind of records for PPE, which will show quantitative details and also situation of the PPE or not, I need to check and give a comment. That is the first point. Second one, physical verification. Now, whether this PPE are physically verified by the management at reasonable intervals. Here also, they are not asking auditor to do physical verification. Very, very important point. They are not asking the auditor to do physical verification. They are asking the auditor to verify whether the management has physically verified their fixed assets at reasonable intervals. Now, here the gray area is, so they are telling, CARO is telling to verify whether fixed assets are physically verified by the management at reasonable interval. Now, what could be reasonable interval? Once in every year? No. As per the guidance note, reasonable interval will be at least once in every 3 years. At least once in every 3 years. So the management of the client company, whether they are verifying their PPE at least once in 3 years or not, that I need to check and give a comment. If yes, the management has done the physical verification, whether any material discrepancies were found out. On doing such physical verification, did the management find out any discrepancies? Discrepancies mean what? Differences. Between what? Between the PPE as per the records and the PPE as per physical existence. For example, as per the physical records, there are some 21 plant and machinery. But when it is physically verified, there are only 20 plant and machinery. So this is a discrepancy. On doing such physical verification, whether material discrepancies were noticed, if so, whether they have been properly dealt with in the books of accounts. On finding that differences, whether management has properly adjusted that in the books of accounts or not. That also I need to give a comment. So 2 points we have seen. First one, regarding maintenance of proper records. Number 2, whether management did the physical verification at reasonable intervals, any discrepancies were found out, how they were adjusted. Next, third point is particularly regarding immovable properties. Third point is specifically talking about immovable properties. When I say immovable properties, they're talking about land and buildings. So here what they say is, when it comes to immovable properties, we need to check the title of the immovable properties. Nothing but go to the client company, ask them, sir, give me a list of all the land and buildings you are having. Now you should ask the management, give the title deeds. Property title deeds will be there, no? Ask the management to give the title deeds. Now I need to check in the title deeds of all that land and buildings, I need to check that these immovable properties are in fact registered in the name of the company. If I find something else in the title document, the land is there in the company's balance sheet, but when I open the title document, it is not registered in the company's name, somebody else's name is there. Then I need to report some details. The same thing they say here, whether the title of the immovable properties is held in the name of the company. If not, No, the immovable property is not there in the name of the company. In the title deed, I am not able to find the name of the company. Somebody else's name is there. Then I need to report some details. Sir, what I need to report? Description of the property. Please describe that property. What is its gross carrying value? It is held in whose name? If not in the company's name, then whose name it is there? Whether that person in whose name the property is there, is he a promoter, director, or employee? Give that relationship with the company also. For what period that asset is being held, and also why it is not there in the name of the company, that reasons. These details you are required to report regarding immobile properties. So 3 points we have covered. Number 1, maintenance of proper records. Number 2, physical verification by the management at reasonable intervals. Number 3, immobile properties. Number 4, revaluation. I need to check whether my client has done a revaluation of its PP. If yes, on what basis they have done the revaluation? Whether they have done it on the basis of a valuation report given by the registered valuer or not. Companies are open to do revaluation, but they can't revalue the assets at their on their own choice. They have to revalue the assets on the basis of a report which have received from registered valuer. And as a result of that revaluation, if change is 10% or more in the aggregate of net carrying value of each class of property, plant and equipment, or intangible assets. By doing that revaluation, if for each class of asset, if the change before and after is more than 10%, then you have to mention that amount also. So here there is a tricky thing here. Most of the students will do the mistake here. Let us take, for example, there are buildings. The management has done the buildings revaluation. There are 3 buildings, building 1, building 2, building 3. Before revaluation, the figures are 100, 100, 50. Now, after revaluation, these figures are, this has become 120, this has become 85, this has become 48. This is the revalued figures. Now you tell me the amount is required to be stated for which asset. So in the CARO they have told if the change is 10% or more, then you have to report. Now you will say, sir, for building 1, the change is 20 crore, which is more than 20%. If I calculate, there was a revalued amount of 20, it has increased by 20 crores. So that means roughly 20% change is there. For building 2, the change is 15, net change is 15. Here also 15% change is there. Here it is 2, that means hardly 4% change is there. You will say, sir, I have to report the amount for building 1 and building 2. You are wrong. You are wrong. They are not asking you to check the change for each asset. They are asking you to check the amount of change for entire class of PP. So I have to check for the entire building, what is the value before revaluation? It is 250. What is the value after revaluation for this entire building? It will be how much? It will be 120, 85. It will be 205. 205 plus 48. It is somewhere around 253. Correct me if I am wrong. I think you should be correct. Yeah. So 253. So if I check before revaluation, what is the value of the entire class? After revaluation of what is the value of the entire class? The change is hardly 3 crore, which is not at all 10%. So am I required to report the amount here? No, you are not required to report the amount here. So you are required to report the amount only when the change is 10% or more, not for individual asset, for the entire class of asset. If before revaluation, after revaluation, the change is 10% or more, then mention the amount. That is a 4th point. So regarding revaluation, 2 things, whether it is done on the basis of a registered valuer, if the change is 10% or more, for the carrying value of entire class of PPE, mention the amount. Next, last one, Binami transactions. So here I need to report whether any proceedings, any legal proceedings have been either initiated or pending against the company for holding any Binami property under the Binami Transactions Prohibitions Act. That means, has anybody filed the case against the company, or is the case already going on for holding any Binami properties as per the Binami Transactions Act? If yes, whether the same has been appropriately disclosed. They are asking the auditor to check, has the company facing any legal cases regarding Binami transactions? If yes, whether company disclosed that in the financial statements or not. They are not asking auditor to disclose the details of the cases. They are asking the auditor to check whether company disclosed the details of their pending cases where in the financial statements or not. That you have to check and give a comment. So this is the first matter which is required to be reported in the CARO, which is regarding PPE. Regarding PPE also 5 sub things. Number one is regarding maintenance of proper records. Number 2, physical verification at reasonable intervals. Number 3, immobile property titles. Number 4, revaluation. Number 5, Binami transaction proceedings. Clear? Next. Now let us come to the next matter. Out of 21, we are done with one. Second matter which is required to be reported is inventory. So regarding inventory, what I needed to verify, let us see. So physical verification. Here also, first thing which I need to report regarding inventory is whether my client company, whether the management of my client company has done physical verification of inventory. Here also they are not asking auditor to do physical verification. They are asking the auditor to comment whether your client company has done the physical verification of inventory at reasonable intervals. Now the question here is, sir, here what do you mean by reasonable interval? For PPA, I told reasonable interval could be once in every 3 years, but for inventory, reasonable intervals is once in every year. Once in every year, the management should have done the physical verification of their asset, of their inventory. If yes, whether the coverage and procedure of such verification by the management is appropriate. Now you have to give a comment, whatever procedure they have followed, whatever coverage they have given for physical verification, is it appropriate? That means, did they cover everything? Did they spend enough of time on that? So I have to comment on coverage and procedure. Then in case if any discrepancy is there, if you find any discrepancy on doing that physical verification, if the management found any discrepancy in the aggregate for each class of inventory were noticed, and that to 10% or more, I need to comment whether they have been properly dealt with in the books of accounts. So on doing that physical verification, if discrepancy of 10% or more has been found out in each class of inventory, like for example, what is the total raw material? 4 kinds of raw material are there, A, B, C, D. So total value of raw material as per books, total value of raw material as per physical stock. If the difference is 10% or more, I have to comment whether it has been properly dealt with in the books of accounts or not. If it is less than 10%, I need not comment it. So that is the first question, whether physical verification of inventory has been done by the management at reasonable intervals, whether the coverage and procedures are appropriate. If the change is, if there is a difference of discrepancy of 10% or more, whether they have been properly dealt with in the books of accounts. One more point is also there regarding inventory, regarding working capital loans. So here what they try to say here is whether your client company has taken loan. For example, X Limited is the company. It has taken loan from SBI and they have a exposure of 5 crores or more. They have taken a working capital loan of greater than or equal to 5 crore. In case if your client company has taken working capital loan from a bank in excess of 5 crores, and for taking this loan, they have given their current assets as security. They have given their current assets as security. Generally, the banker will give you loan only when you offer security, no? So your client company has went to the bank, SBI. They told, sir, we need 10 crore rupees of loan. The banker will ask for security. Your client company is telling, okay, sir, we will give our current assets like stock, debtors. We will give our current assets as a security. You give us 10 crore rupees of loan. Okay, the bank has given 10 crore rupees of loan to your client company, and your client has given your current assets as a security. Now, in case of working capital loans, the company, the borrower is required to submit periodical stock statements because stock will keep on changing. They have given the stock as a security, right? And this stock will not remain constant. This stock will keep on changing. So borrower needs to submit periodical stock statements. So your client company, after taking the loan periodically, once in every quarter, they will send stock statements. Now, as an auditor, they are asking me to check whatever stock statements your client is submitting to the bank. Are they submitting genuine stock statements or fake stock statements? In the recent times, some fraudsters, what they have done is they submitted fake stock statements for the bank to get excess loan. So in order to tackle that, they put a responsibility on the auditor now. In case your client company has taken working capital loan, that too in excess of 5 crore rupees, and they have given their current assets as security, they will submit periodical stock statements. Generally, quarterly stock statements they will submit. As an auditor, my responsibility is to check whatever quarterly stock statements which my client is submitting to the bank, whether they are genuine stock statements, whether they are matching with the books, or they are submitting fake stock statements. I have to comment. In order to protect the interest of the banker, they have put this additional reporting responsibility on the auditor. But here you have to remember one thing, this reporting requirement will become applicable only when your client has taken a working capital loan in excess of 5 crore. In case if your client company has taken a working capital of less than 5 crore rupees, you need not comment on this. Clear? So these two are the matters which are required to be reported regarding inventory. What are they? Physical verification at reasonable intervals. In case of working capital loans, periodical stock statements are genuine or not. Clear? So 2 matters we are done. Out of 21, how many we are done? 2 we are done. Now, third point. So third matter which is required to be reported is regarding investment guarantees, securities, loans or advances which are given by the company, your client company's assets. So if your client company has given any advances to others, they have given any guarantees, they have given any securities, they have given any loans and advances to others, regarding them, I need to check certain points. Third point is very, very important. First thing, I need to check whether my client company, has provided any loans or provided any advances in the nature of loans, or they have acted as a guarantor, or they have provided any security to any other entity, If yes, nothing but your client company has given loan, advance, security or guarantee to other entities. If that is the case, I have to report what is the total amount of such loan given and what is the balance outstanding for subsidiary, associate, joint venture separately, for other than subsidiary, associate, joint venture separately. Very simple. So if you see here, once again, if I read it, I will give you an example to make you understand. So whether during the year the company has provided loans, advances, etc., etc. If so, indicate what is the aggregate amount and also balance outstanding with respect to such loans or advances or guarantees or security to subsidiary, joint venture and associates, and what is the aggregate amount and balance outstanding with respect to such loans and advances to parties other than subsidiary, associate, joint venture. I will give you a simple example to make you understand. Take for example, you are conducting audit of the client X Limited. Your client company has given loans to 10 companies. They have given loans to 10 companies, to 10 other entities. Out of that 10 other entities, 2 subsidiaries are there, 1 joint venture is there, 1 associate company are there. Remaining 6 are other than subsidiary, associate, joint venture. Now I need to report what is the total amount of loan given for subsidiary, associate, joint venture, and what is the balance outstanding as on 31st. As on 31st of March, what is the balance outstanding for these 4 entities? I have to give the total for that. For these 6 entities which are other than subsidiary, associate, joint venture, what is the aggregate amount of loan given? What is the balance outstanding that I have to divide and report separately? That's all. Divide the aggregate amount and balance outstanding for subsidiary, associate, joint venture separately, for other than subsidiary, associate, joint venture separately. However, this point is not becoming applicable to companies whose principal business is to give loans. This is very, very important. This point will not become applicable to companies whose principal business is to give loans. So whose principal business is to give loans? Banks. But anyhow, for banks, CARO itself is not applicable. However, NBFCs also can have a principal business of giving loans. For NBFCs, CARO will become applicable, but this point will not become applicable. You need not report this point in case of NBFCs. Clear? Simple, no? Very simple, guys. In case if your client company has given loans, divide how much amount has been given for subsidiary, associate, joint venture, how much amount has been given for other than subsidiary, associate and joint venture, divide and report it. This point will not become applicable for those companies whose principal business is to give loans. Second point, I need to check, I need to verify on what terms and conditions these loans are given. Like for example, what is the interest rate? What is the repayment period? So what is the repayment schedule? I need to check what are the terms and conditions, and I need to give a comment whether these terms and conditions are prejudicial, whether these terms and conditions are harmful to the interest of the company or its members. Like the company is giving loan without any security, without any interest, without any repayment period. So these are all the terms which are prejudicial. So I need to check this. Same we have seen under 143 subsection 1, the same point they are asking you to comment here. So terms and conditions, whether the investment made, guarantee provided, security given, and the terms and conditions of the grant are not prejudicial. They should not be harmful to the interest of the company. Third one, repayment. So I need to check the company should not just like that give a loan and ignore it. They should also ensure that repayment of principal and payment of interest is happening regularly on or before the due dates. The company is receiving the repayment EMI amount or not. That also I need to check. So that's what they say in respect of loans and advances, whether schedule of repayment of interest and schedule of repayment of principal and interest has been stipulated, and whether the repayments are regular or not. Next, in case if the company has given any loan and if it remains overdue for more than 90 days, I need to check what steps are taken by the company for recovery. The company has given loan, it has become overdue. What do you mean by overdue? Due date is over, but still the amount is not received. Now the company should not sit idle. They should have taken some steps for recovery. I need to verify what steps they have taken for recovery and give a comment. For which kind of loans? Which remain overdue for more than 90 days. Next one, fifth point, rescheduling or extension of overdue loans. So now this is what? I'll give you one simple example. Take for example, we are in the financial year 23-24. I am conducting audit of the client X Limited. In the previous year, the company has given loan. In the current year, it has fallen due. In the current year, what happened? It has fallen due. Fallen due means the due date is in the current year. Now, when the due date falls in the current year, what the company should have done? They should have recovered that amount. But instead of recovering the overdue loan, what the client is doing is they are extending it. They are extending the due date, or they are renewing it, or they are giving a fresh loan to the same person to repay the old loan. If the company is doing these transactions, you tell me, is it a normal transaction or it is something mischievous? It is mischievous. When the loan has fallen due in the current year, the company should have recovered it. Instead of recovering, they are either renewing it or extending the due date, or they are giving a fresh loan to the same person to repay the old loan. So if that is happening, I need to comment about these kind of transactions also. That's what they say here. Whether any loan or advance in the nature of loan granted which has fallen due, in the current year, its due date has come. It has been either renewed or extended. Instead of collecting the repayment, they have extended, or fresh loan has been given to the same person to settle the old loan. If these kind of transactions are happening, I need to report what is the aggregate amount of such dues which are renewed, extended, or settled by fresh loans. How much amount of such loans were renewed, extended, or fresh loans are given to the same parties? The total amount I have to mention. Along with that, I need to also comment on percentage to the total loans and advances. So take for example, if the company has renewed, extended, or given the fresh loans to the same parties to the amount of 50 crore rupees. So I will commit it's 50 crore rupees. Also, I need to calculate what is the percentage in the total loans. For example, total loans given during the year are 200 crores. Out of that, 50 crores are in the nature of extension, renewal, or fresh loan. If I calculate the ratio, it will come to somewhere around 25%. So this percentage also I have to report it. Understood? Next one, demand loans without repayment period. Whether your client company has given any loan without mentioning any repayment period. You tell me, if the client is giving loan without mentioning any repayment period, is it good thing or bad thing? It is a bad thing. Then you have to report it. So what do you have to report? So whether the company has granted any loans or advances in the loans either repayable on demand or without mentioning any repayment period, I have to mention what is the aggregate amount and also percentage. Here also I have to mention the percentage. And also, out of these demand loans, how much amount was given to promoters and related parties, that amounts also separately I have to state it. Clear? So this is the third matter under CARO regarding investments, guarantees, loans, advances given by the company. In that, 6 sub matters are there. Number 1, I need to segregate the amount for related parties and other than related parties. I need to check the terms and conditions. Number 3, if I have to check whether repayment is getting collected on time or not. If it remains overdue for more than 90 days, what steps are taken for recovery? And in case if the loan has fallen due in the current year without getting repayment, they are renewing, extending, I need to report those details. And in case if they have given demand loans, I need to comment on that demand loans as well. So this is regarding the third point. Now, let us come to the fourth point, very simple one. Fourth point is also regarding loans, investments, guarantees made by the company only. This is also talking about assets of the company, receivables of the company. Here simply what I need to check is, in case if the client company has given loan, investments, or guarantee, they are doing it after complying with the provisions of 185 and 186 of the Companies Act. So section 185 and 186 of the Companies Act gives some conditions, gives some restrictions regarding giving of loans and advances. I need to check and give a comment whether those provisions of 185 and 186 are complied with by the client company or not. That also I need to check and give a comment. Very simple one, not important from the examination perspective. Second one is, fifth one is acceptance of deposits. In case if your client company has accepted deposits, I need to check 3 things. Whether provisions of the Companies Act are complied with or not. 73 to 76 of the Companies Act contains details regarding deposits, whether that 73 to 76 of the Companies Act are complied with or not. Whether they have, in some cases, RBI will issue guidelines for acceptance of deposits, whether those guidelines are followed or not. In case if there is any order of court or CLB, I need to check whether that order requirements are also followed or not. If any of these things are contravened, I need to report the details. As simple as that, nothing else. So in case if your client company has accepted deposits, compliance with 73 to 76 of the Companies Act, directives issued by the RBI, order given by any CLB, court, or tribunal. If any non-compliances is there, explain the nature of non-compliance. Simple. Next, sixth matter which is required to be reported is regarding maintenance of the cost records. As we all know, each and every company is not required to maintain cost records. Section 148 of the Companies Act is there, which is giving some applicability criteria. If the company fulfills the criteria given under Section 148, then only they are required to maintain cost records. I need to check whether my client company is fulfilling the requirements of section 148. If yes, whether my client company has maintained the cost records or not. So simply whether section 148 is applicable. If yes, whether they have maintained the cost records or not. Seventh point, this is going to be important. Seventh point is regarding statutory dues. Seventh point is regarding statutory dues. So first of all, what are statutory dues? Nothing but those amounts which are required to pay because of the requirements of law. Nothing but legal payments. So when I say legal payments, income tax, GST, PF, ESI, so all these payments we are making because there is a law which is making us mandate to pay this. So regarding the statutory dues like income tax, GST, PF, ESI, etc., there are some reporting requirements. And for the purpose of reporting requirements, we are dividing statutory dues into two categories. Number one is undisputed and number two is disputed. Sir, what is undisputed? Undisputed means there is no issue. There is no issue. There is no fight between any department or SSC. Both are agreeing. For example, income tax department sent a notice. You please pay 10 lakh rupees of income tax which you have evaded. The SSC is also not having any objection. He is not fighting. Income tax department sent a notice. The client did not fight. That means there is no issue going on. There is no dispute going on. On the other hand, dispute means there is some issue going on. See, department is telling you are required to pay this much amount of tax. Client has filed a petition. No, I'm not required to pay the tax. The case is going on before assessing officer, commissioner or court, tribunal. Somewhere the case is going on. The fight is on. So that we call it as disputed. So regarding undisputed statutory dues, there are some reporting requirements. Regarding disputed statutory dues, there are some reporting requirements. When it comes to undisputed statutory dues, the requirements are, I need to check, is the company regular in depositing undisputed statutory dues? Within the due date, they are depositing all the undisputed. If there is no dispute, you should have paid it on or before the due date. So I need to check whether the client company is depositing all the undisputed statutory dues regularly. Regularly means on or before the due dates. If not, no, my client company is not paying some statutory due. There is no dispute also. Then I need to comment extent of arrears of outstanding. Nothing but that amount of outstanding statutory dues as at the last day of the financial year concerned, which is outstanding for a period of more than 6 months from the due date, then they become payable, shall be indicated by the auditor. What they should do, if not, if the company is not regular in depositing undisputed statutory dues, I need to find out as on the balance sheet date, how much amount of statutory dues are there which are outstanding for more than 6 months. That amount only I have to report. I'll give you one example to make you understand. Take for example, financial year 23-24. Okay. The company is required to pay some TDS amount. Take for example, they are required to pay the TDS amount on 7th of January 2024. 10 lakhs they are required to pay. They did not pay it till 31st of March 2024. This 10 lakhs is still outstanding. This 10 lakhs is still outstanding. There is no dispute also. Am I required to report this amount? Not required. Why, sir? The amount is outstanding, agreed, but it is not outstanding for a period of more than 6 months as on balance sheet date. Let me give you another case. The company is required to pay some GST for the month of September or for the month of July. The due date is for the month of June only, you think. So the due date is 20th of July 2023. They are required to pay some GST amount of 20 lakh rupees as on 20th of July 2023. This amount is remaining unpaid as on 31st of March 2024. Am I required to report here? Yes, this amount is required to be reported because it is outstanding for a period of more than 6 months as on balance sheet date. So simple regarding undisputed statutory dues, whether the company is regular in depositing on or before due date it is depositing. If not, the amount which is outstanding for a period of more than 6 months, you report it. If it is a disputed dues, so the company has not paid some amount because there is a dispute going on, there is case going on. Regarding the disputed dues, what are the things I am required to report? I need to comment what is the amount involved in the dispute, for how much amount the case is going on, and the forum where the dispute is pending, before which authority case is pending. Is it pending before court? Is it pending before tribunal? Is it pending before commissioner? So that forum also I have to comment. Clear? So these are the reporting requirements regarding statutory dues. Once again, an important point. Now, let us come to the 8th point. Disclosure of undisclosed income. Now, what is this? Nothing but in this point they say that I need to check whether during the current year, whether any income tax assessment happened. When I say income tax assessment, the return has been taken up for scrutiny, or there is some proceeding, there is some income tax raid which has taken place. Like that, during the year, whether any income tax assessment has taken place, that could be scrutiny, income tax, right, whatever it is. And as a part of that income tax assessment, my client has surrendered some income, which he did not previously surrender. Previously, he has hidden some income, but now as a part of assessment, take for example, he's disclosing, he's surrendering 1 crore of income now. So if that is the case, surrendering this income before the income tax authorities alone will not be enough. This income would have missed from the books of accounts also. Now I need to check whether this undisclosed income is also recorded in the books of accounts or not. This undisclosed income is recorded in the books of accounts also or not. Now, if you did not offer for taxation, that means you would not have recorded in the books of accounts also. Now during the year, income tax raid happened, you are surrendering the income. Now surrendering alone will not be enough. You have to bring that income into books of accounts also. Whether that has happened or not, I need to check. Sir, if during the previous year no assessment has taken place, simple, you need not comment anything. You can simply say no assessment has taken place under Income Tax Act. As simple as that. So if I read it for your comfort, whether any transaction not recorded in the books of accounts have been surrendered or disclosed as income during the year in the tax assessment under Income Tax Act. If yes, whether previously unrecorded income has been properly now recorded in the books of accounts or not, I have to give a simple comment. So this is the 8th point. Now 9th point is regarding repayment of the loans. See, we have spoken so many things about loans given by the company. Now there is one dedicated point which is talking about loans accepted by the company. In case if your client company has taken loan, regarding those borrowings, you need to comment certain points. What are they? Default in repayment. Whether your client has done any default in the repayment. Sir, what do you mean by default in the repayment? Default could mean two things. Either you are not repaying, or even if you are repaying after the due date, that is also default only. Either you are not repaying altogether, default. You are repaying it, but after the due date, that is also default only. So I need to check whether my client has made any default in the payment of the loans. If yes, I need to comment what is the amount of the default and what is the period of the default. That too, I have to report it lender wise. For each lender wise, what is the amount he has defaulted, for what duration he has defaulted, I need to comment it. So this is the first thing, whether there is any default in the repayment of loans. Number 2, whether your client has been declared as a willful defaulter by any borrower, by any lender, sorry. Your client has taken any loan, but they have violated some terms and conditions regarding the loan they have taken, and their account has been classified as willful defaulter. Sir, how will you get to know? If you go through their credit score reports, CIBIL score reports, you will get to know whether they are classified as willful defaulter. So that is the second point I have to comment, whether the client has been declared as a willful defaulter by any lender. Third one, purpose of the term loan. In case if your client company has taken any term loan, long-term loan. So generally, when you need some long-term loan, you have to go to the bank, tell them purpose. If the banker is convinced with the purpose, he will give you loan. Now, what some companies started doing is they go to the bank, tell some convincing purpose. They will say, sir, we are going to build a factory. For that, we need loan. The bank has given loan. But instead of using that for the purpose of construction of the factory, they are using it for some other purposes. If you find any such transactions done by your client, report it. So that is the third point, whether term loans were applied for the purpose for which they have been obtained. If any amount is diverted, I need to comment. Next, usage of short-term loans. Similarly, your clients also will get short-term loans, working capital loans. Instead of using for short-term purposes, whether they are using for long-term purposes. Short-term borrowings should be used only for short-term purposes. You can't bring a short-term capital and use it for long-term purposes. If you find any such transactions happening, report it. So C and D are talking about usage of long-term and short-term loans. Fifth one, loans taken to meet the subsidiary company needs. In case if you find that your client company has taken loan not for meeting the obligations of your client company, but for meeting the obligations of its subsidiary company, associate company, or joint venture company, those amounts also you are required to report. Your client has taken loan not for your client's requirements, but for the subsidiary, associate, joint ventures requirements. Your client company has taken loan, report that transactions. Next, loans against pledge of securities of the subsidiary. Now, last point, your client has taken loan for your client's purpose only, but for taking loan, they have to give some security. No, what they have pledged is whatever shares they are holding in subsidiary, associate, joint venture, that shares they are given as a security and they got the loan. If that is the case, report that loans also. So there is a thin line of difference between fifth and sixth point. Fifth point is talking about your client has taken loan not for your client's requirement, for subsidiary, associate, joint venture. Sixth point, your client has taken loan for your client company's requirement only, but they have to offer something as security. No, what they have offered as security is they have pledged the shares of subsidiary, associate, joint venture. Clear? So these are the points which are required to be reported regarding repayment of loans. Once again, this is going to be important from the examination perspective. Next point, 10th point, it is regarding utilization of IPO and FPO. Sir, what is this? In case if your client company has made IPO or FPO, they will tell the purpose. No, they will tell the purpose in the prospectus for which they are raising the money. So I need to check whatever money they have raised by way of IPO or FPO, whether they have utilized the same for the purpose for whatever they have stated. In case if they have not used for the said purposes, I have to report any default is there, any delay is there, or even if there is any subsequent rectification. That means initially they misused, later they compensated. Even that subsequent rectifications also I have to report. Similarly, if in case if the client company has done preferential allotment or private placement of the shares, even for preferential allotment also, private placement also, there will be prospectus. So you will say something to the investors, sir, we are going to raise this money for this purpose. There also I need to check whatever money they have raised by way of preferential allotment or private placement, whether they are using it for the said purposes or they are misusing it. In addition to that, I also need to check the compliance with the provisions of section 42 and 62 of the Companies Act. So if I read it, whether the company has made any preferential allotment or private placement of the shares, fully or partly convertible debentures during the year. If yes, check the compliance with 42 and 62. And also I have to check whether amount has been used for the purpose for which it has been raised. If not, I have to report the details. Clear? How many we are done? Out of 21, 10 we are done. Now, 21st one. 21st one, reporting of frauds. If you see here, we have already seen reporting requirements under 143 subsection 12. In addition to that 143 subsection 12, you are also required to report on frauds in CARO also. So in CARO, what I have to report? Let us see whether any fraud by the company or on the company has been noticed or reported during the year. If yes, I have to comment what is the nature and amount involved in the fraud. If any fraud has been committed by the company or on the company, I need to comment what is the nature of the fraud, amount involved in the fraud in the CARO also. In addition to that, I should also comment whether any of the auditors have submitted form number ADT4. We have seen reporting requirements under 143 subsection 12. If the amount involved in the fraud is 1 crore or more, you have to submit form number ADT4. Now I need to comment whether any of the auditor, not just me, either company auditor, secretary auditor, whoever it is, has any of the auditors submitted form number ADT4? That I need to give a comment. Along with that, I should also comment whether there are any whistleblower complaints, whether the auditor has considered any whistleblower complaints. I hope you all know about whistleblower complaints. If something is going wrong in the company, then internal people only will report to the regulatory authorities. Whether any such whistleblower complaints are there, and as an auditor, have you considered them or not? So these are the three simple things regarding CARO: nature and amount involved in the fraud, whether any ADT4 has been submitted, and auditor has considered whistleblower complaints or not. Let us come to this 12th point, Nidhi company. 12th point is applicable only for Nidhi company. In case if your client company is a Nidhi company, then you are required to comment on this. Sir, what if my client company is not a Nidhi company? Tell the same thing in the auditor's report that your client company is not a Nidhi company. So in case if your client is a Nidhi company, 3 points you are required to comment whether net owned funds to deposits ratio in the ratio of 1:20 or not. Which means for every 1 rupee of net owned funds, Nidhi company can accept a maximum of 20 rupees of deposits only, whether that ratio is fulfilled or not. And also whether Nidhi company is maintaining 10% in the unencumbered term deposits. Whatever money they have raised, out of that 10%, they have to keep in fixed deposits, that too without any charge. So that is also fulfilled or not. And next one, whether there has been any default in the payment of interest or repayment of deposits. So this point is common anyhow. Nidhi company I need to comment whether my client company has made any default in the repayment of principal or interest. So these are the few things which I need to comment regarding Nidhi company. As I have told, if your client company is not a Nidhi company, the same thing you will try to say there. Then we have 13th point is regarding related party transaction. Very simple. In case if my client is having any related party transaction, I need to check whether section 177 and 188 of the Companies Act are complied with or not. 177 and 188 of the Companies Act contains the provisions regarding related party transactions. I need to give a comment whether my client company has done the related party transactions as per section 177 and 188. And regarding related party transactions, there are so many disclosures which is required in the financial statements. Even I need to give a comment. All that disclosures which are required as per accounting standards are given or not. Accounting standards or Ind AS, whatever it is. So checking the compliance with sections of the Companies Act and checking the disclosure requirements. So this is point number 13. Then we have 14, internal audit system. I need to give a comment regarding internal audit also. I need to comment whether whatever internal audit team my client is having, is it commensurate, is it matching with the size and nature of the business. Like for example, my client is of the size of Reliance, but their internal audit team only 2 persons are there. You tell me, is the internal audit matching with the size of the company? No. So I have to give that comment whether the client's internal audit team is commensurate, is it matching with the nature and size of the company. And also, as a statutory auditor, have you considered the reports of the internal auditors? Did you use any internal audit reports for the purpose of your work? That also you have to give a comment. So two simple things, whether internal audit team is commensurate, whether the size of the internal audit team is matching with the size of the business, and have you considered any internal audit reports. Then finally, 15th one, non-cash transactions. If your client company has entered into any non-cash transaction, like if they have entered into any barter transaction with the directors, they can't do it in whatever manner they want. There are certain details, certain rules which have been given under section 192 of the Companies Act. So I need to check if my client company has entered into any non-cash transaction with the directors, whether the provisions of section 192 are complied with or not. Next, 16th point is regarding NBFC. In case if your client is a NBFC, then you are required to report on these details. Sir, what if my client is not a NBFC? As usual, you will say the same thing. My client is not a NBFC, reporting requirement under this clause will not become applicable. But in case if your client is a NBFC, then you have to comment certain things. What are they? Number one, whether your client NBFC is required to get registered under 45 IA of the Reserve Bank of India Act. If yes, whether they have obtained the registration or not. So first point, you need to check the registration requirements under RBI Act. Number two, whether your client is doing any non-banking financial or housing finance activities without obtaining certificate of registration from the RBI, that also you need to check. So first point, in case if they're required to get registration under 45 IA, did they get that registration or not? Second point, without getting certificate of registration from RBI, is your client company doing any non-banking housing or financial operations? And core investment company. See, after becoming NBFC, if you fulfill some conditions, NBFC will get a status called CIC, core investment company. If you get CIC status, you will enjoy some benefits. So I need to comment whether, if, for example, after becoming NBFC, if you fulfill 10 conditions, you will get status of CIC. So in case if my client is enjoying the status of CIC, I need to check whether those conditions are fulfilled continuously or not. So that's what they say, whether the company is a core investment company as defined in regulations made by Reserve Bank of India. If yes, whether it continue to fulfill the criteria of a CIC. In order to become CIC, some criteria is there. Whether that criteria they are fulfilling or not, I need to check. Now, after becoming CIC, if you fulfill some extra conditions, you will get another status called exempted CIC or unregistered CIC. For example, after becoming NBFC, if you fulfill 10 conditions, you become CIC. After becoming CIC, if you fulfill some 5 extra conditions, you will get a status of unregistered or exempted CIC. In case if your client is a exempted or unregistered CIC, whether they fulfill this extra 5 criteria also or not, I need to give a comment. Clear? So if you read it slowly here, whether it continues to fulfill the criteria of a CIC, and in case the company is an exempted or unregistered CIC, whether it continues to fulfill such additional criteria also or not. And also I need to comment if my client company is a group of companies. In that entire group, is there only one CIC? If there is more than one CIC, and indicate how many number of CICs are there as a part of the group. As a part of entire client group, if there is only one CIC, well and good. If there is more than one CIC, for example, holding company is also CIC, subsidiary is also CIC, associate is also CIC. As a part of group, 3 CICs are there, indicate that number. Understood? So this is what regarding point number 16. So 3 simple things. First one is regarding registration under 45 IA of the Reserve Bank of India Act. Number 2, obtaining valid certificate of registration. Number 3 is regarding CIC. Next. 17th point, cash losses. Whether your client company has made any cash loss in the current year as well as previous year. If yes, mention the amount. It should have made cash loss in both the years. In the current year and also in the previous year. In both the years, if they have made a cash loss, you have to report it. Sir, what is cash loss? Will it be equal to the loss as per statement of P&L? No. Cash loss is something which you have to calculate separately. You have to take profit or loss as per the statement of P&L, and you have to add back non-cash expenses, reduce non-cash incomes. The balancing figure you get, that will be either a cash profit or loss. In case if it is the cash loss, both in the current year as well as in the previous year, mention that amount of cash losses in your CARO report under clause number 17. Now, coming to the clause number 18, resignation of auditors. You have to comment whether there has been any resignation of the statutory auditors during the year. If so, you need to consider the issues, objections, or concerns raised by the outgoing auditors. Because of what reasons they have been resigned, because of what objections they have resigned, because of what issues they have resigned, you need to consider that as well. Understood? Now, 19th point. 19th point is a bit interesting. Here you have to comment on future viability of the company. Here you have to comment on future viability of the company. This is the only exception to the general audit. Generally in audit, we comment only on historical financial information. But here, because of this point, because of clause number 19 in the CARO, we are even required to comment a little bit on future also. But once again, we are not giving any guarantee of the future. Just we are giving our opinion. So in this point, what they say is, as an auditor, you have to give your opinion. So first we'll read the B point. Whether auditor is of the opinion that no material uncertainty exists as on the date of the audit report, that company is capable of meeting its liabilities existing as at the balance sheet date and when they fall due within a period of 1 year from the balance sheet date. Nothing but, as on the date of signing the audit report, you have to give your comment. Is the company able to pay its liabilities which fall due within a period of 1 year? So if I have to put it in simple terms, whatever current liabilities are there, is the company in a position to pay all their liabilities which fall due within 1 year? Or is there any material uncertainty existing? Nothing but, in the coming 1 year, whatever liabilities which fall due, is a company in a position to pay that liabilities, or is there any doubtfulness is there? You have to give your opinion. Sir, but how can I comment? Will I toss a coin and say, I am tossing a coin. If head comes, company will be able to pay. If tails comes, company will not be able to pay. You have to do in that way? No. You have to give this opinion, but there should be basis for that opinion. What is the basis for that opinion? That they are telling in the first point, on the basis of financial ratios, by doing ratio analysis, and also by doing aging and expected dates of realization of financial assets and payment of liabilities. You have to do the aging of on what date I will realize my financial asset, on what date I have to make the payment of financial liabilities, and also by using other information accompanying the financial statements, by using other information which is added to the financial statements, and also by using auditors' knowledge of the board of directors and management plan, by sitting with the management and understanding their plans. So you have to do all this. You have to do ratio analysis, you have to do aging analysis, you have to use the financial statements, you have to sit with the management, know their plans. After doing all this analysis, you have to give your comment. Is the company in a position to pay all its liabilities which fall due within 1 year, or is there any doubt existing in your mind? Clear? See, once again, this is just an opinion. This cannot be taken as a guarantee by anybody else. And then we have 20th point, which is regarding unspent CSR expenditure. So this is a bit tricky point. I will try to simplify it. So here they say two things, number one, number two. So assume that your client company is required to spend CSR expenditure. As we all know, some 2% of average net profits of the last 3 years, they are required to spend on social welfare. So assume that company is required to spend 10 lakh rupees of money on CSR. Now, up within 6 months from the end of the financial year, take for example 23-24. So till 31st of March 2024, this is a balance sheet date within 6 months. That is on or before 30th of September 2024. Is the company having any plan to spend this money? Is the company having any plan to spend this money? In case if the company is not having any plan, I have to report whether they have transferred to a specified fund as per Schedule 7. So let me read it first, then you will get the clarity. Whether in respect of other than ongoing projects, the company has transferred unspent amount to a fund specified in Schedule 7 to the Companies Act within a period of 6 months from the expiry of the financial year, as per the in accordance with the compliance with 135 subsection 5. So what does that mean is, take for example for the year 23-24, I will elaborate it. 10 lakh rupees they have to spend on social welfare. Now, how to spend this 10 lakh rupees? The company is having a project ready. They want to give 2 lakhs as a donation for a orphanage. They want to spend 4 lakhs for providing shelter for old age people. Some 3 lakh rupees they want to use it for construction of the school. they want to use it for construction of the school. These are the only projects they have decided. I'm not telling they have spent that actual money. They have the projects for this much amount. How much they have to spend? 10 lakh. They have projects ready for how much amount? 2 plus 4, 6, 6 plus 3, 9 lakhs. I'm not telling they have spent 9 lakhs. They have a project ready. What they want to do, they know for 9 lakh rupees. Now balance sheet date is over. After that 6 months also over. They don't know what to do with the remaining 1 lakh rupees. Total they have to spend 10 lakh. Out of that they have a project ready. I'm not telling they have spent, but they know what to do with the 9 lakh rupees. They have an ongoing project. But within 6 months from the end of the financial year also, they don't know what to do with this 1 lakh rupees. Now the Companies Act says, if you don't know what to do with this, you transfer to the fund as given under Schedule 7. That means in Schedule 7, some funds are specified. One example is Prime Minister National Relief Fund. So Prime Minister, some funds are there. So some funds are given, which will be managed by the central government. You have to transfer that money to the fund, which has been specified under Schedule 7. Government will take care of that money. Once the money goes to the fund, you will not get it back. So that's why if you don't want the money to donate to the government, you want to do it by yourself, you should at least have what projects you are going to take care of it within 6 months. They're not asking you to spend, but keep the project ready. If the project is not ready within 6 months, if you are unable to decide what to do with that money, that will go to the fund, like Prime Minister National Relief Fund, etc. PM CARES fund also comes here. So that money will go to the fund and you are not going to get it back. So that I need to give a comment. So if I read it once again, whether in respect of other than ongoing projects, that means you don't have any ongoing project. The company has transferred unspent amount to a fund specified in Schedule 7 to the Companies Act within a period of 6 months from the expiry of the financial year in compliance with 135 subsection 5. Now one more point regarding CSR expenditure is there. Take this 10 lakh rupees only, 9 lakh rupees you have a project ready, 1 lakh has gone to the fund. Now in this 9 lakhs also, see 2 lakh rupees immediately you have written a check donated to the orphanage. 4 lakh rupees, this also you have written a check given it to the old age home. But this 3 lakh rupees you want to use it for the construction of the school. But we all know construction of the school will not happen in a day or two. It is going to take some time. So what you should do is, this money, for this money of 3 lakh rupees, you have a project ready, but it is taking some time to spend it. Now what you should do is, you should open a separate account, unspent CSR account. You have to open in the bank and keep that 3 lakh rupees of money in a separate bank account. And from that account you spend for CSR. See, on this 3 lakh rupees, company only will have control. But the purpose of the Companies Act is separate CSR funds from the normal funds of the company. So this 3 lakh rupees, you have a project ready, but don't mix it with the regular funds of the company. Open a separate account, keep that money in a separate account. Company only will have control over that amount. They will spend it slowly. Okay. In the first point, the amount has gone to the fund. You are not going to get it back. In the second point, the company only will have control over it, but just they are dividing the funds. Understood? So that is the second point. If you see here, whether any amount remaining unspent pursuant to any ongoing project, there is a project going on, but still you are required to spend money. That amount you have to transfer it to a special account, a separate bank account. You have to keep it. In the previous one, if you don't have a project ready, transfer it to the fund of the central government. Government will take care of it. Clear? So this is regarding clause number 20. Now we have clause number 21. As I have told, this point will come in the audit report of consolidated financial statements. This point will come where? In the audit report of the consolidated financial statements. Sir, what I have to give the comment here? Very simple. Take for example, X Limited holding company is there. It is having some subsidiary company, associate company, joint venture company is there. Now for all these companies, individual audit reports are there. For all these companies, individual audit reports are there. For this holding company also, individual audit report will be there. Now, while I am conducting consolidated financial statements audit, as an auditor, I have to go through individual audit reports of the companies. And there also I have to go through CARO reports of these individual companies. Now I have to comment in the audit report of the consolidated financial statements, whatever companies which are included in the consolidated financial statements, in their company audit report, in their CARO reports, did the auditor give any negative comment? If yes, for which paragraph the negative comment was given, I have to explain it. So once again, if I give you example, so X Limited company is that, which is holding company, Y Limited subsidiary, Z Limited associate, and we have some A Limited, which is a joint venture. Now holding company will have standalone financial statements, they will have the audit report, they will have CARO in that audit report. This company will also have a separate audit report, this company also will have a CARO. this company also will have a CARO, this company also will have a CARO. Now all this company's financial information will be clubbed together and consolidated financial statements will be prepared. Now on this consolidated financial statements also audit report will be given. Now I am the auditor conducting the audit of consolidated financial statements. What I should do? I should open this company's CARO report and check whether any of the paragraph contains negative remark. Okay, no paragraph contains negative remark. I open this company's audit report. I am able to find one negative comment in para number 10. Para number 10 contains negative report. I open this company's audit report. In the CARO report, I have seen para number 11 contains negative remark. In this A limited company, no negative remarks. Now I have to mention in the audit report of the consolidated financial statements, I will say in so and so company Y limited, which is an associate company, para number 10 contains a negative remark. In so and so company Z limited, which is my subsidiary company, para number 11 contains a negative remark. This information I have to include in the audit report of my consolidated financial statements. That's what they say here. If I read it, whether there have been any qualifications or adverse remark by the respective auditors in the CARO reports of the companies which are included in the consolidated financial statements. If yes, indicate the details of the companies and the paragraph number of the CARO report containing the qualification or adverse remarks. That's all. These are the 21 matters which are required to be reported. And one more important thing here. See, whether you get a negative comment or positive comment for any of these points, all the matters are required to be mandatorily reported. Irrespective of whether you get positive comments or negative comments, all the 21 matters are compulsorily required to be included in the auditor's report. So this is what regarding CARO, guys. With this, we are done with the audit reporting revision, audit reporting chapters revision. Here and there, some important other information is also there. SA 299 is also there, which is talking about how to conduct joint audit of the financial statements. This SA 229, I will cover it along with the 200 series. I will do one revision series for SA 200 series. In that SA 200 series, I will try to cover SA 299 there. Not now. In 299, I will try to cover. In 200 series video, I will try to cover joint audit. So with this, I will completely, I have done the revision of all the important concepts of audit reporting chapter.